When the dollar is weak, right, everybody wants to borrow dollars, right, because it's a freebie. I'm going to borrow some dollars today, and I'm going to pay them back tomorrow when they have less value. So I get free money. Now, normally what would happen in a circumstance like that is interest rates would go up, right? And then, that would make it more difficult to borrow dollars because now it would cost you more. And that's what would encourage people to lend. Yes, I'm losing money because the dollar is losing value, but I'm making up for it with this really high interest rate that I'm getting. Right. And so if I add the interest, it'll subtract from the depreciation of the principal. But because the Federal Reserve does not want interest rates to go up, and you have all this demand for borrowing in dollars, the Fed comes in and supplies that demand. The Fed is what's funding all of this lending, right? The Fed buys these bonds to keep interest rates artificially low. And now in order to do that, they have to print money. The Fed has to create new dollars to make these loans that no one in the private sector wants to make. So you get more dollars. They just keep increasing the supply of dollars, which puts even more downward pressure on the price of dollars, which means more people want to borrow them. And of course, ultimately what you want to do in inflation is you want to keep on borrowing dollars and buying real things with those dollars. Because if you're buying real things, as the value of the dollar goes down, the dollar price of those real things is going up. And if the interest rate on your loan is really, really low, if you buy real things that have income, like stocks that pay dividends, real estate that pays rents, it doesn't even cost you anything to service the debt, right? So inflation and artificial low interest rates just encourage debt, borrowing money, speculate in assets. The way you stop it is you let interest rates go up, and that crushes all the speculators because the asset prices crash, they default on the loans, they can't pay them back. But the Fed has already decided that that is never going to happen in America. The worst thing that can happen is deflation, right? Is falling asset prices, is debt defaults, is bankruptcies, right? That's the Great Depression. That's what they think of, or the financial crisis. So the government is always going to err on inflation. That's what Powell is saying right now. He's so worried about letting interest rates go up because the economy is so indebted. He's like, well, we're not going to try to be preemptive on inflation, which is the precedent, right? There's that old expression, never let the inflation genie out of the bottle, right? Because once it's out, it's really difficult to get it back in. So you're supposed to err on the side of caution. Hey, maybe there's going to be inflation. Let's not wait until we see the whites of its eyes. Let's fire now. Just, that's what they're supposed to do. But Powell is like, he knows how addicted we are to cheap money. He doesn't want asset prices going down. He wants the government to have to spend more. He doesn't want the government to have to be fiscally responsible. So he's basically, taking a chance that inflation is transitory, even though there's no reason to believe that it is, because I think Powell figures, if I have to fight inflation now, it's going to be a disaster. So let's just hope I never have to fight it. Even though by not fighting it now, he guarantees a bigger fight later. But what I'm saying, and what the markets still don't get, is the Fed is not going to do it. Because when push comes to shove and they have to make the decision, they're not going to do it. Like I said, you're not going to pull the trigger on the handgun to cure your headache. Right. You're going to deal with the headache. And so it's not going to be until there's a crisis. Now, I think when the dollar is in free fall, right, when we really have a currency crisis and a sovereign debt crisis, in that type of environment where like all hell is breaking loose, then maybe the Fed will be, okay, I got no choice. I got to pull the trigger here. But until that time, they're going to kick the can down the road.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
I mean, why deal with reality if they don't have to? And, they've been lulled into a false sense of complacency. This has been going on for a long time, right? The Fed has been printing all this money, propping everything up, bailing everybody out. And as far as they're concerned, so far, so good, right? They're not looking at the enormity of the debt, the trade deficits, the budget deficits, the hollowing out of the economy. They're not looking at all the collateral damage that their policies have caused. All they care about is that the bubble is keeps getting bigger. Yeah, right. But at some point it's going to pop, and then they're going to be forced to with a very difficult decision on do they stop the dollar from going to zero? Do they stop America from being Argentina or Zimbabwe or Weimar Republic, but it's going to be very difficult to avoid that because then they have to let interest rates go way up and then allow the chips to fall. They have to allow banks to fail, and they can't bail any of them out. They can't bail out anybody. They have to let the government default on its obligations and slash spending, because the only way they've been able to do the bailouts in the past is when they can print more money and cut rates. But if you're fighting inflation, how do you fight inflation? You withdraw money from circulation. You sell treasuries into the market, and you allow interest rates to go up. Well, if the Fed is doing that, well, then the government has no money for bailouts. The government needs a bailout, and there's nobody to bail them out.
Yeah, so let me back up here and just kind of walk through that counterbalance that we were talking about before. So we've got maybe less lending initially with the commercial banking system, but we know the Fed is lending heavily in the financial economy. I mean, we just go back to March 2020, we saw them issuing or buying debt from corporates, to the special purpose vehicle and whatnot. So maybe that was the counterbalance there, but maybe in the future, the Fed continues to backstop the loans that the commercial banks are making. So if it's not on the commercial bank's books, then who cares? Why not continue to lend? Because the Fed is going ahead and buying that paper. And then you get that kind of double whammy with the creation of additional dollars when you combine that with the deficit spending of the government with the Fed monetizing it. So I just wanted to wrap that up. But
I think maybe one point too. I think what happens with the banks is a lot of these banks, they can go directly to the Fed and they can just borrow right from the Fed at the Fed funds rate, and they can turn around and they can buy U.S. Treasuries. They can buy mortgage-backed securities with that money, and they make the spread, right? So they're borrowing at 25 basis points and they're lending maybe at 150 basis points, right? And they make that spread all levered up. But the only way this can work is if the Fed basically assures all these banks, we're never going to let interest rates rise. Because if they let interest rates rise, the banks would all fail. Because then the value of what they purchased, these loans, these long-term loans, would collapse, right? If all of a sudden the banks if they were paying 25 basis points and earning 150 basis points, and now all of a sudden the Fed has to raise rates to fight inflation, and now rates are 5%, but the assets that they bought are still yielding 150 basis points, but now the cost is, they go to huge losses. They may not be able to withstand these losses. And so the Fed basically creates an unsustainable situation, and then it's forced to try to sustain it indefinitely. And so that's why, again, it's put itself into a box where fighting inflation is impossible, because you can't do it without creating an enormous financial crisis. And so instead we're going to have a currency crisis.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members, where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active, and see you on the other side.